Kranthi Bathini is here to break down all the market action and investment strategies, especially as we run up to the Samvat 2082. But first up, Kranthi, the news that we're hearing this morning, Donald Trump claiming that India will stop buying Russian oil, and in fact, India will buy $15 billion worth of US oil, not having much of an impact on stocks this morning. But overall, India is yet to respond officially. Overall, if that were to be true, if India were to stop buying Russian oil and go ahead and buy US oil, we don't know at what price levels as yet, how's that going to bode for India's economy, India's oil imports, and therefore on the energy pack on Nifty 50?
Karthik, good morning to you. Yeah, the statement came from President Trump, but we need to wait for how India is going to respond. By and large, it's not a overnight thing. Okay, it will happen gradually. And we need to wait for the Indian government response also, because this is not a new news. Okay, this has been coming in the media from the past 2 months and all, but still India has been importing the oil from Russia. So one of the key energy resources for us is Russia right now. So how India is going to respond at this point of time, we need to wait. And also we are right now, the trade negotiations also going on between India and US with respect to India-US trade deal is concerned. So this thing is going to play a very crucial role. So how gradually India is going to reduce the dependence on Russian oil also crucial. So we need to wait and watch how things are going to be. Of course, the President Trump have the nature to give very outward statements. So we need to wait and watch how things are going to be evolving in the next couple of weeks.
Right, and of course the wait and watch has been on since Jan of this year, 20th Jan, when President Donald Trump became president of the United States.
And we have been keep on importing.
Absolutely, and our imports have not reduced, though there were reports in between that India is going to cut down. But I'm looking at the energy pack this morning. Now, you mentioned the India-US trade deal negotiations. India is also negotiating the FTA with the European Union, and it seems that, that oil imports from Russia are likely to be at least a bone of contention, if not a completely slippery slope or a stumbling block as far as India-EU talks also go. So there's got to be diplomatic pressure on India to actually cut down on oil imports. But that pressure does not seem to be playing out on investors this morning, because they seem to be lapping up Reliance stocks this morning, but at some point ditching perhaps ONGC. Explain to us this sort of conflict that you're seeing on the chart right now.
By and large, Karthik, Reliance right now, okay, it's more about a conglomerate business. There are other businesses are playing on card, and also the sum of the parts valuations of Reliance Industries is concerned. Some kind of value buying we do expect in Reliance Industries, and also on the table, the geo listing also there on the table. So these are the factors tend to play on Reliance Industries. Of course, the oil to chemical business, okay, the petrochemical business do play a key role, but the other retail and other segments of the businesses do play on Reliance Industries in the medium to short term. ONGC is a pure oil play. That's the reason we can see a tangible impact on the stock in the market in the opening of the trade.
All right, Kranthi. And staying with India, US as well as India-EU trade talks, I'm also looking at the non-energy, the steel and the cement business. And of course, remember, this was one of the massively impacted sectors when the tariffs were first announced. First the 26% and then the slightly reduced 25% and then the double to 50% tariffs imposed on India. Yesterday, we saw a massive rally in this segment. But today, the sentiment seems to be a bit muted despite more positive news coming in direction of India-US trade talks.
Yeah, Karthik, in a medium to short term, okay, these stocks are much vulnerable. But given the kind of the long-term outlook for these stocks, within the domestic demand is concerned, that's going to be robust in the coming quarters. So if you say these stocks are insulated from the external shock, no, definitely, because of the tariff worries have been weighing for all these companies with respect to their exports are concerned, but domestic business is going to drive these companies in the coming quarters, Karthik. So by and large, investors can stay invested in the stocks, and the domestic growth worries that has been hampering these stocks market sentiment in the medium to short term. So that was the reason the stocks have been in a range bound, especially the infra-led stocks like metals and cement stocks are concerned. So one can hold on at this point of time, and the domestic demand is going to drive the sales and revenues in the coming few next coming quarters.
All right. I want to shift focus to the auto sector, and in fact, I'm going beyond the Nifty 50 and looking at including even Hyundai Motors, which again made a massive announcement yesterday of investing as much as 45,000 crore rupees in India, including launch of a few electric vehicles as well as SUVs by 2030. So, what do you make of the auto pack in general right now, given that we've seen GST cuts, given that we've seen excellent auto sales numbers emerging? I think they were up about more than 5.5% or so, and the fact that that global players like Hyundai are taking the Indian market more seriously, committing to invest a lot more money, and also appointing an India head. You're seeing Hyundai is in fact pretty much top of the line when it comes to percentage gain compared to its four-wheeler peers.
Absolutely, Karthik. The GST has given a big sentimental booster for the auto sales in India in concern. Look at the Maruti sales and the showrooms and dealerships have been filled with the festive cheers at this point of time. So the sales entered into a new dimension. If they get support from in the coming RBI monetary policies, that will definitely increase the sales of all the automobile companies in the coming quarters. So, and Hyundai, which has been the strong OEM maker in India from past 25 years, because in the past 25 years, many global brands entered India and they exited India. Just for the example, like Ford Motors, they exited India. But Hyundai Motors, they could able to thrive and understand the Indian consumer. That's where they are taking the advantage, and they have a strong product portfolio starting from the entry to the premium range. And now they are planning to enter the premium segment in a more serious way. So they have a strong product portfolio, and investors with a long-term horizon, definitely they can look at to Hyundai Motors and the other OEMs like Maruti and M&M.
Right.
They are well placed, but M&M is playing more with respect to the premium play, like the mid-segment SUVs kind of a thing. They don't have any segments like the hatchbacks, or they don't have any entry-level models. But whereas the Maruti and Hyundai, they have the advantage. Of course, Tata Motors do have a different business model with respect to the recent demerger announcement. So
Right.
by and large, Indian automobile industry is at a very sweet spot. They received the required support from the government in the form of GST. Of course, India, if you just observe, we tend to call it as ex showroom price.
Right.
But if we further dig down, drill down how the elements of the pricing, India is one of the highest taxation country in terms of the automobiles sales are concerned, that
That's
are
right.
cars are concerned. So the GST adds like a booster for these companies.
Absolutely, and a turbo booster at that. We will leave it at that. Kranthi Bathini, thank you so much for your time this morning. Always a
Pleasure.
pleasure having you here on News9.